Hello traders, welcome to the weekly market overview with me, Pierre at PAFX. I hope you all had a great trading week last week and that we get another good trading week for the upcoming weeks. We have lots of charts to look at, see what the market sentiment is right now and what been going on with all the trade war talks, the Turkish situation. We're gonna be looking at all that in this weekly market overview. Please, if you do like this session, do not forget to hit the like button and show your support for me and this channel. And if you are new to this channel, do not forget to hit the subscribe button as well. As usual, we start with a disclaimer, which I want you to read carefully to understand the risk involved in trading. These sessions are only the way I see the market and the way I will be trading it, and it's not to be seen as a signal in any way. So if we have a look at next week's news events, as major events, we have nothing on Monday. The first major event is Tuesday, where we have government Lowy speaks for the Australian dollar, monetary policy minutes as well for the Aussie. Wednesday, New Zealand retail sales, CAD core retail sales, and for the US dollar we do have the FOMC meetings minutes, and of course crude oil inventories, which gonna move mostly oil and USD CAD probably. Thursday, no major event, and Friday we end the week with core durable goods orders month-on-month for the US, and Fed Chair Powell speaks. Very important to keep an eye on that. Yeah, after the week trading weeks ends, we have government Polo speaks for the CAD. So yeah, as you see, as major event we do not have much of events, but if we add the medium impact event, we do have some to keep an eye at. Especially on Thursday we do have some news from some PMI numbers for the euro. We start with French manufacturing and service, then Germany manufacturing and service PMIs, and then of course after that we usually get the whole Europe PMI numbers. So, but the most important is gonna be the French and the German number. Those gonna be what gonna base the flash manufacturing PMI for the whole Europe. So yeah, those were the news event for next week. But as you know, guys, we should keep an eye on what I think the most important thing right now is the trade talk and the trade war, especially between US and China. And you maybe saw last Friday when we've got this Wall Street Journal article that especially the stock market moved nicely to the upside based on that, and Aussie dollar as well did a nice move based on that. Aussie usually feel good when the Chinese are doing well, and this was some kind of good news. It's very early to say that we're gonna have anything positive out of that. It is still on a low level talks in a preparation for the big meeting between the presidents of USA and China. So we need to keep an eye on this. It's scheduled the 22nd to 23rd of August. Talk between the two countries on low levels. Yeah. Then we do have another situation that we need to keep an eye at, and that is the situation in Turkey and the situation, the crisis with the Turkish lira. And as you see on this chart, last week the rally stopped at around the 7 dollar, and we've got some correction lower. But does that mean that the situation is solved? I don't think so. There is nothing that says that this situation is over, yeah. And what's worrying and what we should also keep an eye at, how the ECB will probably react, if we're gonna get any more comments about what they think about the situation, because it's very wrong to think that this is only about Turkey and it have nothing to do with the rest of the world. It always does. And if we take a look at some of these charts, if we look at the private sector foreign debt in percent to the country's GDP, you see that Turkey, it's about 42% of the GDP, yeah, private sector foreign debt. So there is banks that need to get paid, yeah. And if this thing start defaulting and trouble starting happens, then those banks gonna have issues. As you probably know, also the biggest exposure to Turkey from the banks in Europe, from mostly in Europe, was Spain. The Spanish banks have an exposure of more than 5% of the country's GDP. So more than 5% of Spain's GDP is exposed in Turkey. That is something big to look at, and the amount of money involved. In the second place we have French with almost 1% and Italy. So these are the three most exposed countries to the Turkish lira. We do have the UK and German as well. But if we start thinking if the worst happened and Turkey start defaulting, the next question is which banks are exposed to Spain, and what will that domino effect will be. So it is actually a very important what's going on right now, and you should keep an eye on those headlines to try to read the sentiment of the market out there, especially if we get any comment from the ECB about this situation next week, yeah. So very important event to keep an eye at. Okay. So let's start making our usual look at the market, and we start always with the Dixie as an intermarket analysis to see what's what been going on with the dollar. So as you see on the weekly time frame, last week we got some rejection after the Dixie moving above monthly R2. It is still a bullish market. We broke about the 200 moving average, and we can agree about that, making higher highs and higher lows. But of course it could be the time for some correction. This move here needs some correction, at least a short-term correction, yeah. So on the daily we see we have this very nice evening star formation, or shooting star formation. I would call it evening star formation. In any case, it's a reversal signal here on the daily, and on Friday we broke previous lows and we close below this swing low here as well. So this may open the door for some correction lower. I'm expecting a possible correction to at least retest these areas down here around the monthly R1, and even if we reach the 95.15, which was the major important level here, as you see, could be also a possible where we may find some bulls defending and for the continuation. So dollar still bullish, but a correction right now would be in place. So I would not be shocked if we see some dollar weakness next week. We've been looking at this head and shoulder in my trading room last week, and we could say that the neckline is broken. Depends on how you draw the neckline, as many traders would say this was a broken neckline. It is actually the first level to look at, and that got broken. And if you're still not sure, we've got a break below this low as well last week, and we closed at the lows. So for next week, possibly if we get another push higher to retest these levels, and then another push lower, yeah, my first important support level for a possible continuation for the longer term bullish moves on the dollar would be around the monthly R1. As I said, on the 4 hour you see it clearly here. This level is a clear level. When we traded based on the head and shoulder situation in the room, we had also a very strong bearish divergence between the right shoulder and the left shoulder and the right shoulder, as you see. So this was a clear divergence and a possible signal for this correction, yeah. And it seems that we start that move already. So yeah, dollar once again long-term bullish, short-term possible correction. Gold dropped like a stone last week. And if we look at this major move on the weekly here, if we measure this whole move here, you see that we dropped almost 4.4%. It was a huge move, and we reached this down here is the yearly S1 pivot point at this level, and at that same level we do have the monthly S2 as well. It's hard to read what it says here, but since both happen to be at the same level. So what happened here was a retest of this major trend line that got broken here August 17. It got retested a couple of times and tried to push higher, as you see, but this move here we have lately here very bearish. The close of the week was even below this low and this low, and yeah, we tested deeper 618 Fibonacci retracement at this level. So it make this area an interesting level right now, even though I think in the long run we probably gonna reach and test these lows down here around the 111.25. It is still a rejection, yeah, but it is a 50% probably of this whole candle, this rejection here. On the daily time frame, we have already got a reversal signal, morning star formation here with the three candles. So gold as well, very extended move, could have some deeper correction. It needs some deeper correction actually, with the Dixie probably starting reversing and gold doing the opposite. One could expect, especially that it is happening at this very important pivot level. As I said earlier, yearly S1 and monthly S2, 618 Fibonacci retracement. Still a very bearish market, of course, but it would be in place to have some correction higher. So on the 4 hour time frame, last week we broke and closed above this high. So on the 4 hour time frame we do have a higher low and a higher high now, and we could keep following this. A counter trend trader would like to maybe see another retest to the yearly S1 and another bounce higher. I think the most important resistance in this chart short term is around this area here, back toward the 1218 1220 area. This is a major support level that gonna change for longer term bullishness or a continuation to the downside. Yeah, so it is an extended move, very strong bearish market, oversold on the daily, extremely oversold on the weekly as well, and it seems ready probably for some correction. Yeah, I would say be careful trading corrections, cause you will not always have the best momentum, but at such a level one could have some nice trades out of that. Oil, as you see, oil testing this major trend line as it happened last week, still looking heavy, even though we've got a little bit of push higher here on the weekly with a little wick here, but still we have a break and close below previous week. We didn't test the extreme lows of this moves yet. On the daily, you see that this channel here and the bottom of the channel happen to have the 200 moving average at that same level. So this is an important area here for oil. We have the trend line, we have the 200 moving average, monthly S1 as well. But on this short-term move on the daily, we're still in a bearish move, as you see, but longer time frame, this is still bullish, and in my opinion, to change that bias, we need to see a break and close below this low, yeah, or at least below the 200 moving average in this channel. The look of it, I'm expecting maybe some more downside on oil, but nothing to trade yet, as far as we are above the 200 daily moving average. On 4-hour time frame, we broke outside of this range, we retested, did another push lower, so the 4-hour is also still a bearish market with major swing low and major swing lower highs as well. So the level that oil is testing right now is a good important resistance around the 66, and keep an eye on that. If it managed to go back inside, we may have a higher correction, but I am more interested to see if we're gonna get a break below the 200 moving average and this major trend line for a probably continuation lower, as you see. So if we look at the weekly, we have a major bearish divergence going on since we started moving higher here. Very important. If this broken, I think longer time frame, we gonna test the 55 area down here as well, as a very long-term move. USD Turkey, we talked about that. There is nothing done here yet, even though we got this correction. We may see some more whipsaw here before another move up, and the major most important level gonna be down around this area, around the monthly R1, for a probably possible continuation. Where is that chart? Sorry. So yeah, I would not say short this market, because many traders been really itching to short it, even though you've got maybe a nice gamble trade here. I would say stay away from this market. Use it only for to understand what's going on. Aussie Jappy, this is a bit tricky right now. Yeah, we broke below the range, we closed at the daily below all this range here, and now Aussie Jappy did almost go back to that range. We didn't enter inside yet. So if we look at the weekly, you see that this was a major break. Yeah, but the close did not happen to be below the last low here, so this was still holding me from saying keep shorting. And on the daily you see that we've went back inside after reaching the weekly S1 here. Still to be seen as a bearish market in my opinion. Could correct a little bit higher. We should start looking at what will happen when we reach the monthly S1 as first level, and up here would be the ultimate level to start looking for short at this major structure inside the range. Aussie New Zealand also a bit tricky. As you see, if we go to the weekly time frame, we had a very strong break above previous high. We broke also above this high, and I was thinking that we may test the extreme highs up here at the 1.618 Fibonacci extension of this move. What we ended up with last week was an inside bar, as you see. And we did test an important support level, but what happened here? We went long in the room in anticipation for a continuation, but we start going sideways for a very long time, and at that time I decided to close the trade and give the market time to decide where to go from here. Yeah, since as you see, after this very strong push we gapped down and we kept moving down to retest this area, but we never got the momentum. So I think we're gonna need to play with this lower time frame range on the 4 hour and watch this this range here. Let me make it a little bit better, something like this. We're gonna work with this range. I mean, if we close below this, then we probably going back inside the lower range and keep moving lower. And if we've got a nice momentum move that break above the high and that the retest hold without closing back inside the range, that could another reason to start thinking to long this market. So give it a little bit of time to play out here. As for now, if we're gonna talk against that long, you see that we have a possible a possible bear flag going on here as well. Yeah, so this could be also a possible bear flag that may broke to the downside and keep moving lower. Not the best level to trade this right now. We still see that the bulls did actually defend this level nicely when was tested with this very strong candle, but there was no continuation in the momentum to the upside. So yeah, give it some time and keep watching this box. Aussie USD still a bearish market, as you see inside this descending channel. We broke below the lows here, and I was expecting to reach down here this area. We didn't do that last week. We've got rejected instead and start moving higher, and especially last Friday. And as I said, when we've got that article from the Wall Street Journal about the China-US stock, the market did like that, and we start seeing Aussie moving in a nice momentum to the upside. So we do have a confirmation of a bottom here, lower low with a Morningstar formation. It went all the way back up, testing these lows right now. There is still some room on the RSI to reach higher. The thing that the day close at the highs shows that there is potential continuation in this move. What could look like as a possible head and shoulder formation. The neckline got broken, and if I'm right about the Dixie and a possible continuation lower, we may see some continuation here, but probably we want to look for a possible retest of the neckline and to put the next push. Yeah, keep an eye on this area as first level of trouble, and later on the monthly pivot point could be also a level of continuation to the downside when reached. Euro Aussie, in my opinion, this looks weak, and that we gonna probably see a continuation to the downside after this possible head and shoulder in the making now. This lower high is now really confirmed after the break below this range, and yeah, the way it looks, and this strong divergence between left shoulder and right shoulder on the weekly make me think that we may go to this level down here, testing these lows. This is one of my favorite chart I'm watching for next week. On the daily, you see that we broke below the range, we retested and then got rejected. Right now trading below the 200 moving average, but to really see the bigger drop, if this would really drop to this level, we want to see this previous low taken out. On 4-hour time frame, you see it as well. We established another new range right now at this level. This box is the new lower range, and yeah, every time we have bearish candles, they look strong and healthy. So expecting more downside, but let's clear out this level first, and then it's gonna be probably a nice and strong drop to the downside on Euro Aussie. Euro CAD as well. I was expecting continuation in this move, but as you see, the weekly and as a pin bar rejection. Hammer, we didn't close below the previous low on the weekly. Daily, we did actually close below this low with this strong move to the downside, and we put a couple of days of correction until Friday, and then we got the news which we shorted here at this level. So this is the major level here on this chart for now. We've got nice number for the CAD, good inflation numbers, and we've got a nice push lower before the market reaches the ADR low and start moving higher once again. It is still a very strong bearish candle on the 4-hour time frame, and this area up here could still be seen as a possible shorting level for another leg to the downside. Any close on the 4-hour above this area, that will invalidate this down movement and possibly make a deeper correction to the upside, because that would break this neckline of this possible inverted head and shoulder here. On the 1-hour time frame, though, you see that this looks like a possible bear flag, something like this. But let's not forget, this was after the news event, and all these candles was late Friday trading, thin market, so one could not rely so much at this pattern. But my anticipation is another leg to the downside is possible here. Euro New Zealand, same thing, expecting continuation to the downside now when we broke this possible trend line. The daily on Friday was closed at the lows as well. At the weekly, though, we had an inside bar instead, so we should keep an eye on this daily and this range on the 4-hour time frame. As you see, any close below this range would keep pushing lower to test probably these lows down here, yeah. But yeah, the look of it, it looks heavy and could continue lower. Keep an eye on this 200 moving average, been acting as good support so far. EURUSD, we have the opposite of what we saw on the Dixie. Daily time frame, morning star formation happening at good support level, yeah, not the best one, but still it is a swing low that the market did use as a possible level to defend. That happened also at the weekly S1, and you see the euro dollar move been also extended. We reached monthly S3, which usually when reached means the low of the months, the low of the day, the low of the week, depends on what pivot time frame you are looking at. So this could keep pushing higher, short-term correction. If you are in a long, I think you should be managing or targeting this area. When you reach this area, could be a good level to take some profit, because that is the level I'm expecting the next bounce to the downside. Looking left, you see that this is an important support that been acting as a strong support in the past and may act as resistance once again. And even here we've tested this area as a possible resistant as well. So short-term correction to the upside before a possible leg down on EURUSD, sorry. Sterling, the most sterling pair in my opinion, still looking bearish and to the downside. So we start with sterling Aussie, and if the Aussie to continue push higher against the dollar, I think this may continue as well. Structure wise, we broke previous low with this move, still making lower highs and lower lows, so anticipating a possible continuation here, and probably longer term to reach this low down here as well. 4 hour time frame on sterling Aussie, I did publish that we're gonna sell this one, sold this double top, and on Friday we've got a nice another sell here on this flag we had before the drop, yeah. So 1 hour time frame as well, we broke below the lows, and seems that we could have some continuation for next week. Look for a possible retest of this area and probably the next move lower. Keep an eye on this structure as first level of trouble, but longer term this trade could be hold to retest these lows as first major support level, yeah. Sterling CAD, same situation, still very bearish. Last Friday ended as bearish engulfing, as you see here. It is sitting at an important support as for now, so you need to keep an eye on that, especially if you're holding a short. As you see, it is been acting as good support here, support, and then support, resistance, support. Very important flip zone, and for more downside we need to break this level to reach this area, so you need to go to a lower time frame, and you see it clearly even on the 4 hour. This still bearish. Any close below this level, a momentum close below that, then a retest and probably continuation is possible on sterling CAD as well. So this is the idea. Sterling JP, this one have a little bit of other situation. Yeah, it is also still very bearish, but these last days here been a bit choppy here around this area. So we broke and closed below this level. I am still thinking that we may reach these levels down here and test those, but it wasn't very easy during this time here. We got bounce, very strong bounce up, then a very strong bounce to the downside, and now we are squeezing here. So you need to keep an eye on these levels. First of all is this level up here. If that got broken, then we may retest these highs, or the best way would be if we break below these lows, then these lows here, then we're gonna continue lower to at least 138.80, as you see here. Okay, there is another possibility here, since we do have strong bullish divergence on the 4-hour, that we may see a deeper correction from this area here. And if that happens, we should keep an eye on this level as a possible shorting area as well. This is also a major support level around the 143.20 area. Okay. Sterling USD, as you see, also very bearish, but last week was an indecision, especially at the end of the week, Thursday, Friday. We've got this starting rotating to the upside, but as you see, many other pairs did the rotation already against the dollar. I mean, New Zealand did that very strongly. We've got Aussie doing that very strongly. The euro done the rotation against the dollar very strongly, but not the sterling. Still bullish, but not in the same momentum we had in the other currencies. So this may be the late to the party, and since the sterling still looking very weak, we didn't see the bigger rotation here. So I am only looking actually to short here, even though I'm saying we do have a correction on the dollar. I am only looking to short levels, and I will be watching as first if we reach monthly S1 for the shorting to the downside, or even better if we reach around the this area up here, 1.30 level. This is gonna be another important structure. Okay, New Zealand USD, and as we said, many pairs did the rotation, and this was one of them. It did rotate, especially on Friday. Also happy on those Chinese news or Chinese US news, and yeah, this could continue this correction toward the monthly S1 before another leg lower. I am still very bearish on this market longer term. If we look at the monthly once again, I think you saw this chart already, guys, but it is worth looking at another time. This is the monthly chart. We broke this correction move. Right now we are trading below this low and all these lows. It's going to be very interesting to see how this month will end, but in my opinion there is nothing here to hold this market as a structure before reaching this B leg down here, and of course below that we have nothing at all to look at. So very important chart to keep an eye at for a longer term trading. On the weekly, after this very strong move to the downside, we're having some kind of correction probably right now. So yeah, that's why that's the reason I am very bullish on the market. So correction toward this level, and probably the next leg down would be a good area to look at for our time frame. If you want to take a counter trend here, you see that we broke the neckline of this inverted head and shoulder. This is the neckline down here. Let me fix that. So yeah, what to watch is any possible retest to the neckline to look for a bullish evidence for a short-term counter trend trade is possible once again toward the monthly S1. There is a possibility after the break of this inverted head and shoulder neckline on New Zealand USD. USD CAD inside this descending channels still. As I said last week, despite the whole strengths in the dollar and all those move on the Dixie break into the upside, this was actually still holding well. And when we did the third retest of this channel top, we had no continuation to the upside, and then Friday we've got the news and the drop. We didn't break and close below these lows down here. That would be much easier. So if you're holding a short, as you see this market closed at the lows, what you want to see is a break and close below this neckline. That would confirm this double bottom, double top, and possible continuation. Once again, we're gonna test that 1.30, a major support level to keep an eye at. It's been acting as good area of flip zone of support and resistance in the past, yeah. So we need to keep an eye on this level. If broken, that will open the door for more downside, probably to test the bottom of the channel, yeah. But as for now, this is gonna be the major support. Even though if we break the neckline here, this is gonna be the major support for this pair. USD Chief still in the chop zone. Weekly, you see that we're not going anywhere, so I would recommend to maybe stay out of this until we see a continuation, especially if you are new to trading. There was opportunities here that we took on the 4-hour time frame, and they will probably keep coming, but if so, you need to really only trade the major range, the edge of the major range, as you see here. So we do have this range. You work on selling the highs, buying the lows every time that tested, yeah. Otherwise, I would recommend you to stay out of this market until it make its mind and keep moving to one direction, yeah. So no higher highs, no lower lows, is still ranging. The range is still in play. Actually, you could still playing that, but do not enter inside this shop, inside in the middle of nowhere here. That would cost you some bad trades. USD Jappy more and more start looking bearish. If we go to the weekly, we see that it's not the best place. There is some spikes and stuff like that. It wasn't as this move to the upside, so it is a choppy area, but looks more and more to the downside, in my opinion. If we go down to the daily, you see that we've got a lower low, a lower high, another lower low, and now last week we put another lower high. We're still trading above the 200 daily moving average, yeah. Could be a good thing to look at, but I think this 110 level gonna be an important level for this market, yeah, and probably a level to be tested next week. And if broken, there is more possibilities for more downside. First support gonna be around the 109.40-ish down here, and of course the popular 108.50 gonna be in play as well. So the look of it right now, despite this choppiness and stuff like that, start looking more and more bearish, but keep an eye on the 110 level. Dow is not, the bulls are not looking back and buying every single dip as there is no tomorrow. The same thing is happening at the S&P 500. As you see, we had this drop and start moving higher. It seems that the market is really willing to test this all-time high one more time, especially if we start getting some good news about the relationship between US and China, and especially if those talks really give us something new. As for now, I think this market is very yeah, the risk, no one is thinking about it, and as you see, we keep buying every dip no matter what. The question is, are we seeing buybacks or new bulls entering the market? I do think that there is a lot of stocks buybacks by companies, and you could look at those charts and you're gonna see huge buybacks been happening lately. So I'm not really trusting these moves, but still it is a bullish market. We follow what the chart is telling us. We broke a higher high right now, broke and closed above previous high, and there is a possibility to once again test this high up here around 25.82. yeah, that very possible. And as you see, if we break that, there is nothing left to hold it before we reach the all-time high once again. So what's interesting here, that we start getting bearish divergence already on the Dow, so that also to be monitored. For our time frame, you see after that drop last week, it did find support at this level I had talked about earlier in videos. Worked it very nicely as support at monthly pivot point, and kept pushing higher since then. Seems like the level up here gonna be an important support level, as it's been tested already as support here in continuation. So it is still buy the dips market. Longer term is to be cautious here now when we start heading toward these extreme highs up here. Yeah. So yeah, gonna be an interesting week. The earnings season is over almost, so there is some left, but one could say the earnings season is over. So let's see what will fire up, keep firing up these markets. Yeah, that was the last market for today. And once again, thank you for watching these videos, guys. Please do hit the like button if you enjoy them, and do not forget to subscribe to the channel. Thank you very much, and bye bye for now.